Hello everyone, I'm Hu Qiao from China. You can call me Joe. Today I will present my research, an overview of ETF return prediction and interpretability in the Japanese stock market. Why LSTM and SHAP? Here is today's roadmap. 1. Introduction. 2. Literature review. 3. Data and method. 4. Results. And 5. Conclusion. Part 1. Introduction. I'll begin with the background and research questions to position the study. The Japanese ETF market has grown rapidly and plays a key role in global finance. Yet, financial time series are volatile, noisy, and nonlinear, making prediction difficult. Traditional models like ARIMA, Gauge capture linear patterns or volatility clustering, but struggle with nonlinearity. Machine learning models like Random Forest, XGBoost handle nonlinearity but lack temporal memory. LSTM models non-term dependencies well, but it is a black box, raising interpretability concerns. So, these are my two research questions. Question 1. Can LSTM improve ETF return prediction compared with traditional models and machine learning models? Question 2. Can SHAP enhance interpretability by identifying key market drivers? Next, Part 2, Literature Review. A brief review of relative models and interpretability approaches. Traditional statistical models. ARIMA captures linear trends, but weak with nonlinear narratives. Gauge models volatility clustering, but is limited for return dynamics. They are simple and interpretable, but weak in complex nonlinear dynamics. Machine learning models. Random Forest and XGBoost provide nonlinear modeling and feature importance. They are flexible and often more accurate than traditional models, yet weak at temporal dependency. Deep learning models. There are many deep learning models. LSTM excels at capturing long-term dependencies and nonlinear dynamics. Other models like CNN, TCN, transformers are also promising, but interpretability remains a challenge. Interpretability is vital for trust, transparency, and compliance. Lime can be unstable. Attention mechanism is model dependent. SHAP offers scheme theoretic, consistent attributions, and is widely used. So, there is a summary. Traditional and machine learning models are easier to interpret, but limited accuracy. Deep learning models, example, LSTM, has higher accuracy, but less transparent. From above, we get a gap. We need a framework that combines predictive power with interpretability. Now, part 3, data and method. I'll describe the dataset, features, model, and the interpretation workflow. I use 5 Nikkei 225 index ETFs. Daily data from January 2015 to December 2024. Sources include the Tokyo Stock Exchange and major financial databases. I build features from market indicators, price, volume, volatility, technical indicators, MA, moving average, RSI, relative strength index, MACD, moving average, convergence, divergence, and macro factors, exchange rate, interest rate, Nikkei 225 index. And I use LSTM model for prediction. LSTM model, the long short-term memory model, is effective for a time series, capturing nonlinearity and non-term dependencies. And the architecture is first input, then to the LSTM layers, then to the dense layer, and finally the output, predicted return. Then I use SHAP for interpretability. Shapley additive explanations attributes each feature's contribution using a game-theoretic approach, enabling transparent explanations and identifying the key drivers of ETF returns. The research framework. There are 4 steps. Step 1, data collection and pre-processing. Step 2, feature engineering. Step 3, LSTM model training for ETF return prediction. And step 4, apply SHAP for interpretability analysis. Part 4, results. Let's turn to the experimental setup and findings. I use a 70-30 train test split. Baselines include ARIMA, Garch, Random Forest, XGBoost, and the deep learning model is LSTM. Metrics, RMSE, root mean square error, MAE, mean absolute error, and R-square, coefficient of determination. Prediction performance. As shown in the table, LSTM achieves the lowest errors and highest R-square, followed by XGBoost and Random Forest. Garch and ARIMA lag behind. Overall ranking: LSTM, XGBoost, Random Forest, Garch, and finally ARIMA. SHAP interpretation. SHAP results show the top drivers: Nikkei 225, exchange rate, volatility index, and momentum. This aligns with the intuition for a Nikkei 225 tracking ETF. Index dynamics dominate, with macro risk and trend signals adding value. Finally, the part 5, conclusion. I'll summarize key findings and future work. So, there are some key findings. 1. LSTM outperforms traditional and machine learning models in ETF return prediction. 2. SHAP enhances interpretability by identifying key market drivers. 3. The combined framework balanced accuracy and interpretability. As for the future research directions, we should explore transformers and TCN advanced architectures and incorporate news, social media, sentiment, and validate across other ETF markets. Thank you for your attention. I welcome your questions and suggestions. Thank you.